Conditions in the EU are worsening, but let us not forget what's happening in the United States. In fact, today we will discuss the 5 charts that will show us that the US is worse than during the Lehman crisis. You came here for the truth, so let me unveil that for you. I have much to discuss today, and first I'm going to begin with the issues that 95% of the people are looking at. Let's look at this article out of Bloomberg. So this is your financial advisor. This is the so-called investors, the stock traders, and all of those who believe in a consistent bull market. Essentially what they've said is that stocks moved to an all-time high in April, but as the month ended, things started to turn and they erased the gains in the S&P. And then they continue to say how the healthcare stocks, small caps, shares of Apple, LinkedIn, Biotech, they've all went down. And this is saying that it is the biggest weekly retreat for Biotech since 2011. So, this is all good information to cover and to know. But if your information stops there, you're getting only, a fraction of the true information that is out there. But remember, those who have all of their money invested in the stock market, this is the basis for their information. They look at this and they look at things like the 200-day moving average and other basic level chart analysis. That's it. That's all that's happening here with all of these investors, unless they have some insider information. But let's move into the real data. Let's actually analyze this for what it is, and why not take really something out of their own playbook. When they look into the deeper analysis, you'll find this: forward PE versus long-term EPS growth estimate. You can read the details for yourself. Okay, what are we looking at here? In fact, this is the most disparity that they have ever seen in this particular chart. The most ever. And now, how many times have I said that in the recent past? How we're looking at a grand disparity, a schism that has formed in between many different factors. This just happens to be one of those. You can see the booms and the busts as they're going through these decades here, but it has never been this grand disparity. This is just one indicator. I've been covering hundreds on here. What about this? Chain store sales declining rapidly over the last year. What does this show us? That, of course, people can't spend as much as they once did. Why? All of the stimulus packages that the government were running, the TARP bailout, and all these sort of things, they're over. The people don't have any more money to spend where they would normally do so at these big chain stores. Look at what happened with Target. Look at what's happening in other different major retailers. They're shutting down the doors in many cases. Yes, there are different reasons for this. It's not all just one-sided. But the truth is that people are more cash-strapped now than basically they have ever been. So this goes to show you the truth. Personal consumption spending change Q1 of 2015. Now, number one, healthcare, of course. Obamacare costs increase, so you're going to have to spend more on healthcare. And then in your housing and your utilities, yes, of course, electricity did go up in price, but we'll forget to mention that. And then you look at the other ones, they're completely insignificant in comparison to these other two. Healthcare, housing, and utilities. These things are just exponentially growing at this point. It's unbelievable to see how fast this is really compounding. Look at what we are spending on the essentials like food, like housing, like electricity. These are essential things. Median asking rent for vacant lot by regions. Essentially what we're looking at is the rental rates. When rent is going up, we know specifically that this could be a sign of, number one, inflation, or number two, more people needing to rent. So the competition becomes more fierce, and those who own these properties can raise their rents. That's what's happening, and this is a very, very, showing us that happening at the moment, where yes, it has been fluctuating, but certainly the rents have been increasing. And that is no doubt right here that people are not able to afford the homes that they did with the whole subprime mortgages. And here they are needing to rent. Speaking of which, we're looking at the U.S. home ownership rate declining, still declining since they had this crash back a few years ago during the housing boom. We were looking at a time when they could never afford these homes, but they made it in a way that they didn't have to afford it. They could simply give them the home. Ever since then, the home ownership rate has been declining. It's been going up and down, and certainly nothing moves down in a straight line, although in this recent past, it looks like it's pretty much going downward. However, these two factors show you that people can't afford what they once did. The S&P 500 could move to astronomical levels, 10,000, 20,000, a million on the S&P. It doesn't matter because real people are in poverty, or they're simply cutting back on everything. The middle class is becoming the lower class, the upper middle class is becoming middle class, and soon enough there will be such a great divide in between the two that there will only be two classes of people. This is here from my book, Houses for Everyone, and I was talking about the U.S. housing boom specifically. Speaking of Fannie Mae and Freddie Mac, and I was quoting Time when I said a new generation of American homeowners paving the way for banks to loan money to low and middle income buyers who otherwise might not have been considered credit worthy. When the government sees that there is a problem, they simply pump it up. They have all sorts of federal programs that are there to stimulate the economy. There is no doubt in my mind that this is going on today. We see this happening in the financial markets, pumping up the stock markets, and they're doing so legally and with intent. Now I have to go on to Greece because there's constantly new information being brought out. They're talking about the country teetering on the edge of bankruptcy. Athens has been forced to raid the coffers of its local government bodies to plug its cash shortfall. Something that I've covered here before, but for those who don't know, this is very serious information. The confiscation measures have been widely resisted by the country's municipalities. Surely they will have no say in the matter. Greek courts are also due to decide whether cuts made to its state pensions while under a bailout program breach the country's constitution. As if a constitution matters anymore. They step on it. Let's move on to this here. Via the Australian, panicking pensioners queued at the banks, raided their accounts, and broke into a board meeting of state pension funds as Greece struggled to pay its 2 million pension recipients. In fact, they claimed that there was a technical hitch that had delayed some of the payments as Greece braced itself to run out of money in days. The country's state pension funds almost defaulted after a shortfall of several €100 million delayed payments to pensioners this week. Many panicked when they discovered that their pension payments were not in their accounts. So this could have been legitimate. It could have been just a technical error. It could have been the fact that they didn't have any money. But what would happen in the city that you're in if all of a sudden people didn't get their pensions? We'd have a big, big mess. And remember that this will occur in major cities around the world. They've already warned about this continuously, that this will occur. They are in the point where they're in the negative territory as well. This is not just in Greece. It's most cities around the world. Look at Detroit, for example. This has happened in your own backyard. And then we look at this article out of the AP. Continuously, I will parallel Venezuela with other countries, particularly the US, where they have raging inflation. They actually raised the minimum wage 30%, specifically because they have the world's highest inflation right now. Now, what does raising the minimum wage do exactly? Well, according to them, it's going to allow people to cope with the rising inflation. This may be in fact true. However, Why exactly is there inflation? What have they done to get it to this point? That is not being addressed. And this right here is killing the people. They can't have their basic essentials. This is exactly what happens. The more that they force upon the public, upon the citizenry, the more this problem will expand. The inflation will increase, and eventually they're going to have to default. They're going to have to go through massive levels of change in this nation, and not for the better. If you found this video informative, please give me a thumbs up. And I also want to tell you that if you like this video, if you like the information in here, then you will definitely like my book, The Money GPS. You can head over to Amazon.com and flip through it and see if you like it for yourself. Take care.